Hello, everyone. It's Friday, February 7th. This is Liam McMahon with your daily moving average video. NFP Friday, we're going to run through real quick what we saw and how the markets reacted. So please take a look over the risk disclaimer and then we will begin. Okay, so we're going to start with pound dollar. It is doing well today. It's been doing well really since the Bank of England was back here. I am still bearish this pair. Alright, we kind of held this descending trend line. I'm bearish as long as we're basically under 164.60. This wedge retest, I think, will be the real bull-bear sort of battleground. And if that wedge holds to form, we should see additional downside from here. If we break back up within that wedge, then terrific. We should be able to see a run up towards 167. There is some major pound news next week. I think Wednesday is the inflation report. So that's something to watch. But for right now, I do still like pound dollar to the downside. Some other dollar pairs, though, I like in the other direction. I do like Aussie dollar higher as long as 89 holds. Looking for 91, then 93 after this initial wedge break. It's held up pretty well. All right, we got a bonus with some good data back here. It's held sideways. All right. Couldn't sustain NFP gains really, but not really too concerned about that. As long as it keeps processing sideways, the risk is for this, short covering move, I suppose it probably is more than anything, to continue a little bit to the upside. Kiwi. Kiwi had a good day today as well, continuing above that trend line. 84 is major resistance, 82 is major support. The yen pairs. We should talk, I guess, about NFPs. They were disappointing. We created fewer than expected jobs in January, and the really bad December number was not really upgraded in anything less bad. The one thing, though, that was actually good news is that the participation rate ticked up. All right, more people looking for work, and the unemployment rate still ticked down. That's not been the trend lately. Usually when the unemployment rate has fallen, it's like, oh, because fewer people are looking for work. That doesn't really count. But this time we did see the participation rate tick up. So that is, there is something to be said for that. You can see the crazy candle here. All right, we dropped almost exactly 100 pips on the initial release and then spent the rest of the day just erasing it. Dollar yen, though, still... Okay, still testing this downside, broken downside trend line. We'll see. It's definitely one to keep an eye on. Aussie yen, same thing. Broke back within. All right, this area looking maybe for a move up towards 93. We'll see. Kiwi yen is just... Ugh. Dollar CAD is another interesting one. We saw good Canadian employment. All right, let's see that spike down. We held this breakout. I still, I've talked about this before. I wrote an article about it, that the CAD fell short just of a huge 50% fib up here, and it would not stun me to see the Canadian dollar outperform, so dollar CAD underperform for a little bit, all right? Another thing I think is worth talking about, especially when we're talking about the Nikkei. Let's pull up the Nikkei. Okay, I wanted volume studies here. Look where, all right, so look at this relatively low volume, relatively low volume, relatively low volume, until we get to here. All right, that's when the sell-off started. You can see we saw a volume spike for this sell-off period. Now look at the last 2 days. Decent volume, but not volume that's higher than the sell-off numbers, all right? So volume studies a little bit concerning, I think, for Nikkei bulls, which would be JPY bears. I'm watching this 15,000 level, all right, a retest of the descending trend line for an opportunity maybe to start seeing some further downside on the Nikkei. So that's something to keep in mind. E-minis, okay, same thing, relatively low volume, not as distinct, but you do see a pop, all right, in volume up here, and the sell-off started, and the recovery candles have not quite matched that. So just sort of something to keep in the back of your head when you're looking at equity charts. Not saying that this isn't the end of the dip and that we may just be continuing higher. That very well could be the case. But I would just be cautious about piling into longs right about now. I mean, realistically, we could see a little bit of upside to about this 1810 figure and then create a right shoulder and collapse. We could just start moving lower off the cloud, or, you know, we could push up through and touch this 1840 retrace, and then we'll see if from there we break higher. There are a lot of different ways this could go, but I don't think that, you know, the bullish case for equities, you know, is 100% intact right now. I'm not as convinced of it as I could be. So that's just something to sort of keep in mind going forward. Sorry, let's go back to my currency charts. Another couple currencies that I'm looking at, Euro Pound holding this trend line. I like this one for higher. The major level that we're going to have to contend with, though, all right, is right about there. You got to get above 83.50, but if we do get above 83.50, this could be a very good move higher for Euro Pound, which again fits with what I'm saying on Pound Dollar, the potential pound correction that would push Euro Pound to the upside. So it's another one to watch. Euro Aussie, 150 support held really well. 154 resistance. It's kind of in an ugly area right now. I don't think there's a particularly great setup on that. Although I should note, there is a potential that we are forming a monster head and shoulders pattern up here, okay? Just the potential. We're not even close to being done yet. We still have an entire right shoulder to form. Fine, fine, fine. I'm not arguing that. But, I mean, let's do a 3-year daily chart, okay? Pretty significant uptrend that ended, all right? It began on an inverse head and shoulders. All right, we've ran, what, 4,200 pips, something like that. So would it stun me to see a head and shoulders form here? No, we already have the neckline set at 150. It's a very clean neckline, so there is something to be said for that possibility. If that is the case, we should expect to see rallies up towards 156, perhaps on Euro strength, more so than Aussie weakness, followed by a sudden and hard collapse. I don't know if it's going to happen, but if it does, it's a setup with some absolutely great targets in terms of, I mean, talking 400 or 500 pip targets easy. So something to sort of just keep an eye on and watch and see if that's exactly how something plays out. All right, I hope you guys have an absolutely terrific weekend. I hope it's very restful and all that other good stuff you look for on your weekend. And I will talk to you on Sunday for the weekend webinar.